Well, speaking of US stocks first, the Wall Street took a heavy beating following President Trump's sweeping tariffs, witnessing the biggest slide in US equities in 5 years. In fact, the US markets wiped out as much as $2 trillion in market capitalization within the first few minutes of trade. The Dow Jones ended almost 1,700 points lower and had slipped into the correction territory, meaning a 10% fall from its peak. The S&P 500 fell 5%, while the nasdaq tanked 6%, shedding over 1,000 points during the day's trade. Now, this action follows the worst day since 2020 for each of the three major indexes. Now, Thursday's sell-off also hit the mega-cap technology stocks especially hard, with Magnificent 7 index sliding more than 6%. Collectively, the stocks in the Magnificent 7, which led the market higher in both 2023 and 2024, lost more than $1 trillion in market value. Now, the pain was felt across classes. The US dollar, a supposed winner from Trump's tariff plans, has extended losses to slip below the mark of 102, while the Bloomberg gauge of the dollar fell most on record. The yield on the 10-year fell 4%. Now, if you look at the weekly movement, the Nasdaq Composite has led the way lower for stocks, falling 4.5% as the tariff plan drove investors to reduce their risk exposure. The S&P 500 and Dow Industrials have slipped 3.3% and 2.5% respectively for the week. Now, both Nasdaq and S&P 500 are tracking for their worst weekly performances since September 2024 and the sixth negative week of the last 7. Now, the global market sold off after Trump on Wednesday itself announced a baseline tariff rate of 10% on imported goods from all countries going into effect on April 5th. Now, several nations face far higher levies, according to the White House annexure. Now, investors now are wondering if countries will be able to strike a trade deal with US to reduce tariff duties. Well, Trump has said he is open to trade negotiations, and about face from earlier statements by administration officials. Well, the US markets crashed. Oil prices also fell after a key OPEC Plus producers meeting. Over to you, Shreyansi, for a quick crude price check.
Well, absolutely, Kanishka. When you take a look at US markets, you do have yesterday's top gainers being your top losers today as well. And when you take a look at crude prices, you have a solid loss coming in when you take a look at crude prices, because it's not that this was not expected, but we were not really penciling this in, because you do have 8 key OPEC Plus producers that agreed to raise combined crude oil output by 411,000 barrels per day, speeding up the pace of their scheduled hikes as well, pushing down oil prices. So when you take a look at the most active contracts in the ICE Brent contract for the June delivery is the one that I'm talking about. $70 per barrel is the kind of level that you're looking at, and a downtick of 5.9% thereabout. And even for the main IMEX WTI contract, that's the most active WTI contract, then $67 per barrel, and 6.4% downtick coming in for that particular contract as well. Now, you do have 8 OPEC Plus producers this month that started gradually unwinding those 2.2 million barrels per day of voluntary cuts undertaken independently from the production strategy of the broader 22-member OPEC Plus alliance, which roughly has 3.6 million barrels per day of separate cuts in place, and that is until the end of 2026. Now, the Thursday decision that you're looking at was taken largely against the backdrop of broader market tumult, largely triggered by sweeping tariffs. So definitely something that we were penciling in, but this move was not something that we were thinking of in terms of it being on cards. Now, again, you do have that entire move being also reflected when it comes to gold, because even gold has eased after that record high on the knock-on effect of a wider sell-off. So even when you're taking a look at gold, safe haven demand has not managed to shield gold there as well.
If you like this video, then like, share and subscribe to ET Now.